Welcome to the weekly executive strip for September 22 to 26, 2025. My bias this week is neutral with a slightly bullish lean, focusing on the range between 6,525 and 6,770. We are watching potential resistance from 6,700 to 6,750, where bulls might take profits based on a measured move. Hard support lies at 6,430 to 6,500 set after breaking out of the trading range, as shown in the chart. Key macro events include non-farm payrolls and the unemployment rate on Friday, which could stir the market. For Monday's plan, the gap up prompts me to go long for a quick scalp targeting 6,750, but I will stay cautious to avoid a potential climax. A gap down means watching the 6,700 to 6,710 zone for market reaction. If buying power is weak, I will short with a trailing stop. This snapshot sets the stage for exploring monthly trends. Let us dive into the monthly outlook with the chart providing context. The trend is strongly bullish, but it carries high risk. We have seen 5 consecutive bull bars sitting well above the 20-period exponential moving average, closing at highs, signaling a potential climax and deep pullback. I expect the yearly all-time high could reach around 6,770 within 2 to 3 weeks, likely before mid-October. A monthly high, possibly printed at 6,731. 5 marks a significant level for this trend. Technically, there is no clear sign of a sharp, bearish reversal, but this bullish run needs consolidation to continue, like a stretched rubber band ready to snap back. No resistance exists due to the ongoing bull trend and refreshing all-time highs, but multiple indicators suggest a pullback. Support holds at 6,430, the bottom of the current monthly bar, with less than a 1% chance of closing below it, given only 1 week remains. This bullish momentum is exciting, but the risk of a pullback is significant. Think of it like a car speeding uphill, needing to slow down to avoid overheating. We must watch for consolidation signs to assess the trend strength. This monthly view frames what we might see weekly. Let us shift to the weekly outlook with the chart offering a clearer view. The trend is neutral to bearish, driven by potential climax after a breakout from a trading range. The market closed at its high, far from that range, raising the odds over 50% of a pullback to retest the trading range high at 6,550. Bulls might take profits here, and bears could test support, as suggested by the monthly measured move. Looking back, the reversal from April 21 formed the 4-section space, and we are now at a profit-taking level for bulls. Multiple technical setups converging here suggest a deep pullback or consolidation is near, like a runner catching their breath after a sprint. No resistance exists due to the bullish trend and all-time highs, but indicators point to a pullback. Support is at 6,550, the top of the trading range. This setup feels like a tug of war between bulls and bears, so we need to stay alert for momentum shifts. The weekly picture leads us to the daily charts. Let us break down the daily outlook with the chart providing more insight. The trend is neutral to bearish, but bulls remain in control. Bears try to reverse the trend after 3 pushes up on September 2, shown by the red arrow, but failed, leaving the market consistently long with minor pullbacks. Technically, no clear pattern signals an immediate pullback, so staying long is the safer bet if you're trading. The worst case for next week is a pullback to retest last week's low at 6,611, the key level to watch, though dropping to 6,550 seems unlikely given current sentiment, like a crowd still cheering for the bulls. If we see more than 2 big consecutive bear bars closing at their lows daily, a consolidation phase could form, allowing bears to push for a temporary bear trend next month. No resistance exists due to the ongoing bull trend, but indicators hint at a pullback. Support is at 6,610, last week's low, a critical level. Think of this as a market pausing after a strong run. These daily dynamics prepare us for last week's 5-minute action. Let us reflect on last Monday's 5-minute chart. We had several good entries. Going long after bar 4 with the stop order was smart due to the gap up and bullish trend in higher time frames. But you would exit early at the wedge top after 2 bear bars or get stopped out later. A long after bar 26 closed, driven by a higher low and a bull trend, ended with a loss at bar 42, a tough outcome. Along at bar 49, using a limit or stop order worked well due to a potential trading range after last week's bull trend, hitting the target of the wedge top by bar 54. These entries highlight the need for precise timing and stop management in fast markets like navigating a rapid river. Let us see how Tuesday built on these lessons. Moving to Tuesday's 5-minute review, check the chart for details. We had 2 solid entries. A conservative short after bar 5 made sense after a gap up with 2 strong bear bars suggesting a trading range or bear trend. You would target a one-time measured move with a 20-period exponential moving average, exiting around bars 28 or 29 after consolidation began. Along after bar 32, based on a potential trend reversal and a broader bull context, reached the measured move target by bar 65 with the trailing stop, though targeting the day's open would have failed. Trailing stops acted like a safety net, cashing you before a fall. These moves show the importance of disciplined exits, setting up Wednesday's review. For Wednesday's 5-minute review, refer to the chart. Shorting after bar 7 was a good call since Tuesday lacked a clear bull trend. The target was Monday's gap at 6,618, the key level, but volatility could have wiped you out. The smartest move was shorting until your trailing stop hit at bar 37's high or exiting at bar 43 due to funk and setups like a wedge bottom and strong bullish signals. Quick exits were crucial, like jumping off a train before it derails. These lessons emphasize staying nimble during volatile events, leading to Thursday's action. Let us look at Thursday's 5-minute chart. Going long above bar 5 was strong with a gap up and a solid signal bar closing at its high, targeting 6,700 for profit taking, though a trailing stop would exit lower at bar 29. Along above bar 33, after 2 pullbacks and a strong bullish signal, did not pay off if you held for a bull trend, either stopping out at bar 76 or exiting early at bar 69. Strong trends often need pullbacks, like a wave retreating before surging. These entries highlight reading momentum, which we will carry into Friday's review. Finally, let us review Friday's 5-minute chart. Short entries at bar 3 and long at bar 5 did not trigger. Shorting below bar 8 was effective in a trading range or bear channel, targeting bar 2's bottom or the wedge bottom at bar 24. You would exit by bar 29 due to strong bullish signals like consecutive bull bars and a wedge breakout. Longs at bars 29, 30 or 31 hit the daily high at bar 40 and continuing long above bar 50 reached a measured move by bar 72, though that is tough in real time. These moves, like precise chess plays, wrap up our week and prepare us for Monday.